All right, all right, all right, all right. Very good, very good. So tonight we are going to be talking about something about technical analysis. Technical analysis. That is what we are going to be looking at tonight. And in technical analysis, we are going to be looking at trading the trend. That is our topic for tonight, trading the trend. As always, guys, this session promises to be an educative one. It promises to be an educative one and a profitable one, because our goal in crypto-based media is to see you get profitable, to see that you are making that profit, that consistent profit. That is what we want. That is why we are holding this meeting. That is why we keep in contact with you guys every Saturday. Every Saturday, we make sure that we do Zoom sessions right here to educate you on market updates, to also let you know, those strategies that can make you money in the cryptocurrency market, despite any despite any market trend. That is why we are here. We are here for you. We are here to make sure that we are playing the cryptocurrency trading game right. So tonight we are going to be talking about trading the trend. We're talking about trading the trend. So last week we talked about fear, the emotions of fear, how to control your fear. I know that a lot of people miss that Zoom session. So if you missed that Zoom session, kindly go to our YouTube channel, Crypto-Based Media. Go to our YouTube channel and you can give yourself a reward. It's just like a 30-minute Zoom session. It was very, very short and educative, and at the same time benefiting. All right, I'm trading the trend. So tonight I'm going to be giving you guys proven methods on how to trade trends and make profits in any market condition. Emphasis on any market condition, because we have different kinds of market condition, and either of those market condition, for a simpler understanding, trend trading is taking advantage of the direction of a price movement. When you first hear about trend, the first thing that should come to your mind is direction. When we have trend, we are going to have direction. So the trend is the direction in which the price of an asset is going. That is what a trend is. That is what a trend is. A trend is the direction in which the price of an asset is heading to, is in presently, or is about to head to. So that is what trend is. Now, you trading the trend is knowing the trend, because that is the first thing. You have to know what trend is it. Okay, I already know the kind of trend it is. Now I can take advantage of this trend that is about trading the trend. And then don't worry, I'm still going to break all this down in smaller particles for you guys. I'm going to break everything down. Okay, forgive me guys, I skipped the introduction part. For those that don't know me, or for those that are just joining this Zoom session for the first time, my name is Rock, and I'm a content creator, a crypto trader, and a crypto analyst. And I create content for crypto-based media. So tonight I'm here again, giving you guys this Zoom session with the topic trading the trend. All right, so I said the types of trend. The number one type of trend is an uptrend. Now, the second type of trend is a downtrend. A downtrend. Okay, I didn't get that spelling right. A downtrend. And guys, don't be surprised that we have a third type of trend. We've said it, the market either goes up, it goes down, or it goes sideways. So the third type of trend is sideways movement. That is the third type of trend. It is sideways movement, So let me just type in sideways right here, sideways. So we have the uptrend, we have the downtrend, and then we have the sideways. Now, how do you recognize these trends? I want to show you guys how to recognize a trend. Right now there's no graphical image on my Zoom slide, so I want to show you guys how to recognize a trend. Okay, I'm looking for a way to increase this guy. Okay, Okay, I think it's in view. Okay. So the first is uptrend. How do you recognize an uptrend? An uptrend is formed when the price moves in this kind of format that you are seeing on the screen right now. If you notice, this is a previous low, and then we have a new higher high, which is otherwise abbreviated as HH. And then after the higher high, we have higher lows. Now, after the higher lows again, we have higher highs again. Now, after the higher highs, we have higher lows again. After that, we have highs again. So that is how an uptrend is. That is how an uptrend looks like. So the uptrend is basically, it moves from higher highs to higher lows, and then it moves up, just like the name implies. It moves up. You are going to see it that is going to move to the up direction. It can move to the upward direction, forming a higher high in price, higher low in price, higher highs, higher lows, higher highs, higher lows. So that is how an uptrend is, and that is how an uptrend is being formed. You know, normally a price cannot just go up and continue to go up like that. The price are going to retrace, they are going to correct, and that is why we have the higher lows. So that is how it works. So you saying an uptrend means that buyers are buying, the market is bullish, everywhere is good, we are getting good percentage gains daily. So that is what an uptrend means. Now let's go to the downtrend. So the downtrend, which is like the current market situation right now. We have the downtrend. We have the downtrend right now. This is the downtrend. Now, you know, we mentioned previously that an uptrend moves in higher highs and higher lows, higher highs and higher lows. Now, a downtrend is going to move in lower highs and lower lows. That is how a downtrend is being formed. You know, we have a previous high right here, then we have it forming a lower low, then we see that small bounce, that relief bounce is called relief pump, and it is forming a lower high. This is just the ideology behind it. In a downtrend, everything is low. So we now have attached to it, part of those lows, we have a very bad low and a little bit good low. So that is why we have a lower low and we have a lower high. We have a lower low and we have a lower high, and that is how it works. Guys, don't get it twisted. Don't get it twisted. You see, the way I'm drawing this for you right here is just theory, guys. It's just theory. In the real chart, the price might not move as smooth as this, but it is still easy for you to recognize that this is a downtrend and this is an uptrend, because the difference is very, very clear. You can see that a downtrend is moving downwards, and a downtrend, if you are going to draw a downtrend or a downtrend line, is going to be from top to bottom. So what if it's an uptrend line? An uptrend line is going to be from bottom to top. That is how an uptrend line is being drawn, guys. This is how an uptrend line is being drawn. So okay, so that's the next is the sideways movement. Now, I said sideways movement is the kind of movement that happens when the price is not going up or coming down. It happens when the price is not going up or coming down. You know, there's not enough volume to pump the market up in the market, or enough volume or enough sell pressure in the market. So the market continues to go sideways. It continues to go sideways. And people say, ah, wow, this is indecision. The market is yet to decide. We don't know what the market wants to do. You know, that is why people say when the price breaks you know that, okay, it's bullish. But if it bounces off that resistance area, you know that, okay, we will continue our consolidation. So these kind of ways, you can either call it a side, you can call it a consolidation, you know, consolidating to the right side. So that is that about how to recognize it. I hope you all can now recognize a good trend. So that is like the first step in knowing how to follow and trade a trend profitably and consistently. So now the next on my Zoom slide is spotting trends in different time zones. Spotting trends in different time frame. Forgive me. Spotting trends in different time frames. Now, guys, you know that in the market, we have different time frames. You know, we have the 1 week time frame, we have the monthly time frame, we have the daily time frame, we have the 1 hour time frame, we even have 15 minutes time frame. So all these things, they work with the chart, they work with the candlestick. About so frame, I make analysis used to make chart, and one is that you can draw your trend lines on different time frame. Now this is the catch, guys. The higher the time frame, the more reliable that trend is. An uptrend in an higher time frame, like a 1 week time frame, and then see a downtrend in a 1 hour time frame, then you know that that 1 hour time frame is less than of the uptrend. Okay, great. I hope everyone can hear me now. So we've talked about, okay, we are talking about spotting trends in different time frames. You know, we have different time frames in the market, in your trading view app, in your candlestick. In your candlestick, we have different time frames, and you can draw your trends in different time frames. You can draw your trends in different time frames. You can draw an uptrend in a 1 hour time frame. You can draw an uptrend in a daily time frame. Whatever the direction of the market is, you can as well draw a trend right there. Okay. So the example I was citing, for instance, now we know that the whole market is bearish and Bitcoin itself is bearish. If you look at Bitcoin on a weekly time frame, you can easily draw a downtrend line. I hope everyone can. Bitcoin is currently trading at the price of $21,005. That is the price Bitcoin is trading at. Now, this is a 1 hour time frame, and this is what I'm talking about. I hope you all guys can still see my screen. Now, normally, if you look at this trend, let me delete this channel I drew right here. If you look at this trend right here, let's try and draw an uptrend here. Trying to draw an uptrend. Oh, great. I hope everyone can see this. I hope you all can see this. I'm currently on 1 hour time frame. So as I was saying, you can see that we are currently in an uptrend on the 1 hour time frame. It is easy for us to say, okay, a higher highs here, higher low, higher low, higher high, and then maybe we're about to form another higher lows, right? So yeah, the uptrend in a 1 hour time frame is still valid, and everything looks bullish. Everything looks okay. We are even in 21,300. Currently, in the 1 hour time frame, the market is bullish. But now let us take a look at the weekly time frame and see what's up. Let's see the weekly time frame and see what's up. Let's see. Okay, great. This is the weekly time frame right here, and it is very, very obvious that this is a bearish weekly time frame. It is very, very obvious. So here we are. It is very, very obvious it is bearish. It is obvious that it is a bearish one, and then it is in a downtrend. So what I was saying is that in the macro view, we call this a macro view. In the macro view, Bitcoin is still like bearish. In the macro view, in the weekly time frame, it is still like bearish. So it is still okay for you to say that, okay, short term the market is bullish, but long term the market is bearish. So that is it, guys. That is you relating your time frame to your trend. Now, the next thing is trend reversal. Yes, trend reversal. You know, we have trend reversal also. We can have an uptrend that is going, and then we are going to have a downtrend that is going to form next. You know, a uptrend transitioning into a downtrend, or a downtrend transitioning into an uptrend. That is how it happens. So trend reversal happens, and then you can see a good example of that on this my Bitcoin US dollar chart. Okay, that chart is currently proving stubborn because of the network, but this is an example of a trend reversal right here. if you can see this right now, we are going to be saying this uptrend. This is an uptrend right here. And then from this uptrend, there is a break in structure. The uptrend has changed course. It's no longer going up, but right now it is now coming down. I hope you all can now understand what a trend reversal is. So it is going up before, now it is coming down. So if I'm going to even be drawing a line here, if I'm going to be drawing a line here, let's see. Oh, okay, I didn't get that right. Okay. Okay, good. So this looks like our uptrend. This right here looks like our uptrend. This right here looks like our uptrend. And this place right here, where the price came down, it is where the uptrend changed course from uptrend to downtrend. That is where it's reversed. That is where the price reversed. That is what we call a trend reversal. So all these things are important for you to understand when we are looking at trading the trend. So we've looked at a trend reversing from uptrend to downtrend. Now let us look at a trend reversing from downtrend to uptrend. And now this is it. This is it right here. So this is previously a downtrend. This is previously a downtrend. And then you can see the resistance line right here. And then the price broke this downtrend line. It broke it and it continued to form higher highs and higher lows, higher highs and higher lows. If you notice, it was forming lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows before. Now the price broke that structure, broke that downtrend, and now it's forming higher highs and higher lows. That is how trend reversal happens. Now, how can all these things help you in trading the trend? Now, if you see a signal like this, that you see a valid change in the structure, can be early in entering a uptrend. I hope you guys get it. And same applies to an uptrend turning to a downtrend. You see a sign of a reversal, it can that, oh, this is the time to sell those coins that you've been holding, because the uptrend is no longer valid, and then we might be heading the downside more. So that is it, guys. That is it, guys. So all these things are very, very crucial, and then they are definitely going to help you. So now, adding to you making profits by trading the trend, adding to that, trading the trend is one of the best ways to make money in any market condition, because honestly, it's like whatever the market does, you are going to follow through. You are not going to place yourself in position to take opportunities from whatever the market does. So now, there's this popular saying that goes by, follow the trend to the end of the trend. You continue to, even if it's an uptrend, you are going to continue to follow that uptrend. So if it's an uptrend, you can follow through, enter early and exit at the site of a trend reversal. That is why I talked about trend reversal. That is why it is very, very crucial and it is very, very important. So it is just for you to place yourself in the position to take those opportunities. Now, if it is a downtrend, you can as well follow the trend. You can as well follow the trend. You know, a downtrend moves in lower lows and lower highs. So immediately you see that a downtrend is about to reverse, and you can see like maybe a break in structure of that downtrend, you can quickly enter and say, okay, I think we are ready for an uptrend. But still, it is still advisable that you set your stop losses, because nothing is certain in the cryptocurrency market. So it's just like you are predicting. It may happen, it might not happen. So that is it, guys. That is it, guys. So I think I've talked about the most important thing in how to do this. So even if you're a futures trader, it's a thing that you can take advantage of the higher highs and higher lows. If it's in an uptrend, the price corrects to higher lows, you can long from that higher low, and then you take your profits at higher high again. So that is how it works, guys. That is how it works. And then if it is in a downtrend, you can short at lower highs, just like we are doing with the market, because we know the market is still in a long-term downtrend. Only if the market wants to reverse right now. You know the market is still in a downtrend. So those relief bounces, we short them. Those relief bounces, we short them. So that is how it works, guys. That is how we make profits from any market condition. What indicator do you use to identify trends easily? The best way to identify your trend is just by drawing your trend line. It's just by drawing your trend line. The network is allowing me to access. Okay, great. I know this. Let me just use this coin as an example. I don't want to use coin as an example. I'm not using Bitcoin or Ethereum this time around. Okay. So I would like to do the 1 day. I like to do 1 day. So if you want to identify your trends, there are some, I don't know, there are a lot of indicators on what is it called, on TradingView. There are a lot of indicators on TradingView that can even show you an uptrend or a downtrend. Let me remove this image so as not to confuse you guys with it, and even my volume. Let me remove my volume. Okay, so this is a 1 frame of cover. This is cover USDT. Now, if you want to recognize your trend here, it is very, very obvious this is a downtrend. But normally the downtrend is not just straight like that. It was in a downtrend for some time, and then it's consolidated for some time. So the best way to just identify these things are to just draw your trend line. Let's say from this guy to this guy, from this guy to this guy. Yes, this is like a downtrend line. This is like a downtrend line right here. Let me zoom in and get a view of it. This is like a downtrend line right here. It's like a downtrend line. Great. So that is it. So right here, the price actually did a deceit. It deceived us that it was going to fake out, But the best way to still draw your trend and recognize them is using these things. If it's a downtrend, you draw it from top to bottom. But if it is an uptrend, you draw it from bottom to top. Look at an example here. From bottom to top. From bottom to top. That is how you draw an uptrend. I hope you get it now. The person that asked that question, iPhone, I hope you get that now. So now you draw it. Now, if you want to use other indicators like RSI, you can as well use these indicators. You can as well use it because you can use it to determine the momentum of that trend. And you can even use it to draw a normal trend set. I think I drew one on, was it Ethereum USDT recently? I think it was Ethereum USDT. I drew one on a 1 hour time frame. I drew something on my RSI. If I've not cleared that chart, okay, it must be Bitcoin then. It must be Bitcoin. Okay, here it is. I hope you are seeing this now. This is me drawing a trend line. Oh, this is a trend line. I drew it from bottom to top. I drew this thing actually from this price. The price was still actually in this price. This was where the market was. But I saw an uptrend forming. So I now drew it from year to year. I drew it from year to year. And look at it. The price maintained that line. The price maintained that line. And then it's continued. It was forming the higher lows, higher highs, higher lows, higher highs, higher lows, higher highs in this same RSI. So it shows your RSI to see the advantage of this RSI over every other thing is that you can easily recognize the trend before it happens on the real chart. That is the advantage of using RSI, or even using other volume profiles like the OBV. So thank you for attending. If you enjoyed from this Zoom session, make sure that you subscribe to our channel, send a message to Crypto Pastor, and send a message to him and tell him to give you a broadcast message that you can use to share crypto-based media to your friends. Share crypto-based media to your friends so that they can also join in and enjoy from our Zoom session. So thank you all for attending. Have a nice weekend.